What's happening? Bam. The views expressed in this video presentation are my opinions and not necessarily the opinions of guests and others sharing or reposting this video. The content is produced only for educational and informational purposes. Do not regard any statements in this video as a recommendation to buy or sell any financial instrument. Investing comes with risk to loss of principal. Always conduct your own research and seek guidance from a professional investment advisor. I am not a professional investment advisor. I'm Dollar Will. We're going to talk about making some money. Looking at the almighty dollar. Thoughts of barbershop talk run through my head. All that talk. Dollar ain't worth nothing. It's not tangible. It needs gold behind it. All that crap we need to get out of our head, okay? When we look at what we're looking at here is the dollar since 1971. And you see it primarily goes down. That's actually good. The government loves it when this happens. The businesses love it when this happens. You should love it when this happens. The only people who don't love it are people who don't invest, either in stocks or buy property or anything like that. Because what happens when the dollar falls, the price of energy and metals goes up. When you buy a house, you're buying a collection of metals and other materials that rise when the dollar rises. When the dollar falls, the interest rate trends with it. But what happens when it rises? Oh boy, oh boy. That's when we have hell. Okay, from 1978 to 1985, we had a rise that stressed things. Right around in here, 1985, 83, in the early 80s, that's when interest rates were extremely high. I remember that. This is also when gold was particularly low. It was like really getting ready to start rising. Okay. Then we had this peak here into 2011. And so everything that's going on with the dollar is really basically trying to recover some of the loss since 2001. And it's been in either going up or sideways since 2011. So you would think with all the talk that the dollar is just like falling off the cliff. In the longer sense, yes, as we just looked at, but in say the last decade, no, no. So all the talk about other countries wanting to get a new default currency, it's all because of this. Because when the dollar rises, it makes their other currencies weaker. When the dollar rises, other countries need more of their currencies to equal. They have to save more of their units of their currency to equal $1. So their debt just gets even more expensive when the dollar starts rising, because they have to again save up more of their money to pay it. It becomes difficult to pay. It crushes them. And so what's happening here is the dollar is obviously trending up. And this last swing here, I believe that we're going to come up to this area here at 1.06. 1.0 in the chart we're looking at is the dollar versus the Swiss franc. There are many ways you can look at it. There's the DXY, called the Dixie. There's an ETF I like to look at called UUP, but I like this one. I like this one because it matches up well when I'm looking at the euro versus the dollar. It matches up well. It looks sort of like almost a mirror opposite. It matches up pretty well when I'm looking at oil. It matches up well when I'm looking at uh, gold. So it's sort of like a mirror opposite of those things. And this particular pair comes closest to giving me that. And so you can watch money move from the dollar to gold and oil and vice versa. And so this next push right here is really going to disturb the world because there's this closing high here in 2015. Once we cross that, and I think it's a certainty that we will, it will be no denying that the economy is severely going the opposite way, and all of the assets that are a lot of commodities that trade opposite the dollar is gonna those prices are gonna go down. But so will your pay. So layoffs because of this debt servicing becoming difficult to maintain. It's going to cause companies to lay off workers. It's going to cause people to not get pay raises. In fact, nobody's going to be thinking about no pay raise. You're going to just be glad that you survived the acts, that you didn't get called to the conference room to be told to go back and clear out your desk. You're going to just be, overwhelmed, overjoyed that you're not one of those. Okay. So when we get up to this level where this blue line is, that's not the end. But we will get a pullback, a pretty significant pullback in the dollar then, and that'll be a chance for a lot of things to rally, and then we're going to get another push. And once we get up here, we're going to have another decline, and at that point, I'll have to measure to see how steep that decline is. Ideally, the dollar will keep falling and make a new low and keep falling, and in the process, we'll be back to normal. Your retirement account balance will start going up and all that stuff, but it's too early for that. I kind of don't think that's what's going to happen. Okay, I'm kind of leaning towards the idea that we have a minor pullback, and the quote hell trade is the dollar making a very long correction of a trend, and basically you're talking about the major indexes making a correction of a degree that goes back to say 1930s, where following the Great Depression. Okay, I'm not saying prices going to go down there. I'm saying the price appreciation since that point, it looks like Superman on the chart, and there's a correction that we have to do. And in that, the dollar and the interest rates will rise, and and the hell scenario is if this little move we're experiencing is part of a longer correction, which could take, who knows, maybe we could be looking at a decade, and we could have a quote unquote lost decade where the dollar attacks this level. Now, that's terrifying, but that's what could be going on. Okay, but first things first, I'm going to take this one swing at a time. Okay, get here, and ultimately when we get here, we'll see how far it falls. So you better be rooting for the dollar to fall, because again, the weak dollar is your best friend. A strong dollar makes all your bills higher. It reduces your job prospects. But if you have cash, if you're loaded, the world is yours. You can travel everywhere and spend Big Willie style, because everywhere is cheap. Usually we travel to Jamaica, Dominican Republic. Basically, Americans travel south because historically the euro and the British pound, Japanese yen, those currencies beat the hell out of the dollar, and so it costs us too much money to go to those places. That's why we normally travel south, because we feel rich when we go south and to Africa. So anything in the southern hemisphere, south of us, United States, we feel good, we feel rich. But going north into the, let's say, the eastern hemisphere, it gets expensive for us. But in this period, where the dollar, when the dollar reaches parity with the Swiss franc, that's 1.0. That means that's the point where $1 equals one Swiss franc. Um, you are Your spending power is the same there as it is here, and so we're approaching that place. And so as we approach that and exceed it, you will see fewer Europeans coming to America because they won't be able to afford it. But you'll see more Americans going to Europe. So if you think that the travel brothers have been popping their collar, you ain't seen nothing yet. Because there's a lot of them are traders, and they're going to get richer, and they're going to be traveling more to Europe and stuff just because they can. Whereas they didn't have the money. They can't. They couldn't stay in those places long. They could travel to the southern hemisphere, and I'm being. This is a generalization. Okay, there are some places in the north where the currency is stronger. I'm sorry, weaker than the dollar. But the main bigger places like Japan and most of Europe, historically, our currency can't hang there. We're not staying long. We getting up out of there. We're gonna stay a couple of days and we getting up out of there and we coming back. But you're gonna see them staying long time, long time, long time, long time. Okay, in those places now. All right, so that's the dollar. That's the context that the dollar strength is bad for gold. And so let's look at gold. Gold and energy. All right. Now, I said that they trade opposite. Now, I say 90% of the time that's true. There are periods where they move together. This crap. These messy charts. I haven't looked at this though. I don't even need this. Um, yeah, now it's cleaner. Now, but they don't trade together long. That it does happen. Even the euro, sometimes it'll trade the same direction as the dollar, but that's an aberration. That doesn't last long. The norm is for them to move in opposite directions. And there were periods during this sideways move where gold and the dollar were trading in the same. They were both going up at the same time. Well, we're about to restore that, and so the gold is creeping up on a critical area. This prior low here. I'm going to go back to candles now. It's almost there, and this is called a support. So when gold, not if gold, when gold breaks this support, the decline is going to pick up. That's the area, basic area I'm talking about. When it falls through here, it's going to pick up. So it's not going to be much to stop it from coming down to this area where it broke out from the last time. So a lot of us traders look at this. This is easy money. It's going to be easy money. I'm not even saying it's going to stop there, but there's no reason to think that it won't continue at least that far. And so gold is in trouble. So dollar strength is going to kill it. And I believe it's going to go below this low in 2015. That high I was pointing to on the dollar Swiss franc in 2015 corresponds with this low. So since I believe the dollar is going higher than its 2015 high, I believe that that's going to take gold lower than this 2015 low. So, but we'll see. And so that's gold. That's let's look at the futures chart of oil. Okay, come on now. This site is just searching. Come on. Okay, let me try. Exxon. Come to all here. Exxon. What am I doing with the M in there? It's just Exxon there. There you go. That'll work too. Okay. So Exxon had a nice little run. Exxon's interesting because they have a mixed business model. They process and refine oil as well. I like to stay with the strict, just keep it strictly on the drillers, okay, the diggers. Uh, so let me see if I can find. But this is getting ready to fall too. Okay. So if you're a refiner, cheap oil is actually good for you. So the things that you process the raw oil into, it's cheaper for you to do that if you are acquiring oil at a lower price. All right. Crude oil, West Texas intermediate. That's so yeah. I was looking here at. Ignore this. This is a big dip where this thing went negative 37. Okay. All right. So this, if this isn't a low, I don't know what is. And every time I see this, I feel like an idiot because I was watching all this other stuff that doesn't even matter, and I missed this trade. I was trading some other crap, and everybody was talking about Bitcoin and all that. Screw Bitcoin. This was the trade. This was the trade that would have changed your life. This was it. And people were saying all this crap about Bitcoin. No. This was the trade. Oil went from nothing to oh, you talking about there are plenty of symbols where you could have gotten 10,000% gain. You know, this would have been more than that if you had bought a futures contract. You know. Anyway, it's the important thing from this chart. I think I had this on a line chart. That's what this was for. Just the line chart is just looking at the closing prices, getting rid of some of that spurious activity. But I'm gonna go back to the candles. So clearly we see it's going down. And so there was a time when there was a period in here, in much of this, the dollar was rising. And so this was one of those times where those instances I was saying that they typically move opposite one another, but they were moving together here. And so for my Elliott wave theory, folks, you see something about this structure, and we've talked about it on the channel. I don't want to get into that here. But the main deal is this thing better stay above this trend line. I don't think it will, but that's the deal. It's got to stay above it. So you kind of got, if you're bullish oil, you kind of need the price to respect that high and to respect this trend line. I don't think that's going to happen. The dollar going to kill it. And if it breaks below this trend line, you can see it pick up speed. How low will it go? Don't know. Might it come down here again? It could, especially if we're talking about a correction of epic proportions way back where I said the dollar would, worst case, that it could attack that high in 1971. If that's the big picture of what we're talking about, oil gonna be a penny stock. All those oil companies gonna be a penny stock. I think the news is doing a disservice to us. They have you thinking we have an oil shortage. We do not have an oil shortage. We have an oil glut. We have an oil glut. Don't let the games they play with you about the strategic reserves, that's artificial. Okay. We have a glut. We don't have a shortage. So that's oil. I did gold. I did the dollar. And I'm gonna do a whole nother show on Bitcoin. I'm not gonna go into it deep here. I just want to make the point. The most important point is the obvious point. Is this symbol is BTC/USD. Okay, so that's Bitcoin versus the dollar. So if the dollar is strong, it eats away at the value of Bitcoin. And so if the dollar is in a strong uptrend, you can't really be excited about buying Bitcoin, because Bitcoin, in order for it to rise, it has to overwhelm dollar strength. And that's an uphill battle. There are many easier things to trade. And that's why I've been on YouTube trying to get my people, I am African American, Pan African at that. I've been trying to get my people who just entered trading for the very first time via cryptocurrency to not be a crypto trader, but just be a trader, period. Trade whatever is working. Don't be crypto centric, okay? You learn how all the markets work and trade whatever's working. So there will be a time for Bitcoin and crypto. There will be a time for that. But between now and then, big money is made other places, and you can be in those other places, and you're not going to miss it. If you hanging out with me, there's no chance you're going to miss it, because I'm always watching the dollar, and the dollar is central to it all. So I missed that oil thing because I was trading something else. You can't trade it all, but dang, nothing else moved like that oil one. Man, I'm gonna be beating myself up about that for a long time. That was the trade of a generation, and nobody's talking about it. That's the trade that we can't afford to miss. So don't let all this Bitcoin crypto stuff make you stupid, okay? Make you think it's crypto or bust, Bitcoin or bust. Nothing else made money but Bitcoin. That's stupid. It's just not true. It's just definitely not true. Okay. So that oil trade would have made you a whole lot more money. Okay. And if the dollar rises, it's gonna destroy it again. And we'll get another chance. There'll be a time to buy gold. Okay. But to buck against the dollar, that's kind of stupid. When the whole world is running the hell out of their currency and buying US dollars. And that is also a big part of why that interest rate is rising. If you go look at videos that I posted on my channel in 2017 and 2018, I was charting the dollar, and I was talking about this long range projection of price activity for the dollar Swiss franc that we're seeing right now. Okay. So I'm a chart reader, and I look at data going back 100 years. Yes, It is that cyclical, that mathematical, that geometric. Yes, it is. And once you understand it to that level, nobody can tell you anymore that the price went up or down because of a news report or because of Elon Musk did a tweet. That's stupid. It doesn't work that way. These countries buy oil. They set up buying programs that last a long time, and periodically they buy too much, and they have to sell off a little bit, and then it becomes a valuable price again, of good value proposition, and they buy it again. So the same people or entities that make the prices go up, those same entities make those prices go down, because price moves too fast in a particular period, say like this, and then it has to take a breather. It runs up, okay, went too far too fast, has to take a breather. That ebb and flow, like a tide, like a wave, like inhaling and exhaling. That's a cycle. It's unavoidable. Nothing goes straight up. There's always a time to take a little profit, and there's a my school of thought that I participate in, Elliott Wave theory, they teach you about those cycles, and there are signs, tips, uh, indications in this price action and in these oscillators, which tell you that the market is top heavy and they're selling off. You can see it. You just have to be taught how to see it. And but the market trends for long periods. So so this would be a hodl in a technical context. But so when we talk about hodling, it's all chart based. We don't think in terms of just holding on forever. It's when the price reaches a certain level, or when those technical warning signs start to show up, then we get out. And so, when people tell you, nobody knew nothing, nobody knew when the top was, they're lying. They're either lying or stupid. Because I can bring up videos of people on YouTube, sometimes me, okay? Sometimes on watch James Kramer, Mad Money on Tuesdays. He brings in technical people. So if you think the technical analysis is mumbo jumbo, and all you listen to are analysts and people who trade the fundamentals and who don't look at the technicals, then in your small bubble that you live in, nobody knew nothing, as you say. But that they're not the world. They don't constitute everybody. So learn about the other side. Learn how traders think, and suddenly everything will make sense to you. All the news will make sense. You'll know what they're going to say before they say it. But you got to come to the technical side to get that insight. So that's all I got. Peace.